So what makes me returns? It's this. Put simply, frequency of rolling 2-year S&P 500 returns since 1950. I'm going to let you into a secret. It's not my ingenuity, it is the market. 32% of the time, average positive return. 32%. 32%. Positive returns 88.5% of the time. The only thing I've got to worry about is, can I just try and avoid, like in 2022, any big negative returns? And then, boom, that part of the pension just grows. I didn't invent the companies I invest in. I did not invent the ingenuity which makes them go up. Why 2-year rolling performance? Well, because if you look at any single year, the variance is huge. You can have a year where you go up 55% on the NASDAQ, and the previous year you might be minus 20%. Okay, as happened in 2022, 2023. So that's why rolling 2 years is a pretty good measure. So now you know the secret. If you want a piece of that action, like, follow for more. Have a look at alpeshpatel.com/links. If your pension's not performing, I think you might want to get in touch with me. When I wrote my very first book in 1997, published by the Financial Times, it was statistical analysis like this, which taught me was the edge. Thanks to some of the world's leading investors that I spoke to and traders that I spoke to. And if you'd like to download a free copy of the book, or one of my 18 books, have a look at alpeshpatel.com/links. Thank you.